Welcome, everybody. Thank you for joining us today. We are going to talk about those darn DPAs, and the snark is on purpose. We want to basically identify and address and overcome some of the common misperceptions or objections or perceived obstacles when it comes to down payment assistance programs. So we're going to take ultimately 5 of the biggest obstacles that we hear when it comes to transactions involving down payment assistance or problems kind of building up your DPA IQ or dealing with these programs. And we're going to address them. Now, some of these are real, some of these are perceived obstacles or objections, but we want to ultimately help everybody overcome any apprehension about working with down payment assistance programs. That's the goal of the webinar. We will have fun. We may ruffle some feathers, but that's the goal. So my name is Sean Moss, and we also have with us in the background Melinda and Tracy from our down payment resource team. They will be answering questions as we go. Please put your questions in the Zoom Q&A feature. It's a lot easier to track the questions there. The chat can get busy. So with that, keep it interactive. If you have questions as we go, throw them in the Q&A, and we'll answer those live if we can, and we save time at the end for Q&A as well. So today we're going to start with a brief overview of the state of down payment assistance, what's going on with these programs today. And then we're going to get into perceptions and misperceptions about down payment assistance programs. Specifically, as I mentioned earlier, by looking at the 5 most common objections that we hear or the most common obstacles to working with down payment assistance. And we're gonna address those head on with feedback from your peers, from real estate agents and loan officers around the country that do a lot of down payment assistance business and have helped identify best practices and ways to kind of cut through the clutter and clarify objectives, timelines, best practices, and so forth. And we'll also point you to some tools to help you along the way and next steps and best practices as we go. So with that, a little bit about us. We are a national database and matching engine of all of the more than 2,200 homebuyer assistance programs across the country. Our team has decades of experience in residential mortgage finance and real estate. We've been doing this for 15 years. We integrate into MLS platforms. So many of you with us today might be members of our MLS partners. We also have a suite of tools for mortgage lenders to help make down payment assistance easier, to help operationalize and streamline the utilization of down payment assistance. And we also have a tool called Down Payment Connect for individual agents and loan officers. Agents, if you're a member of one of our MLS partners, you actually have Down Payment Connect for free. And there's a subscription version as well. We have other webinars dedicated to that. So we're going to focus on the goal today. Ultimately, we are here to help you connect home buyers to the down payment help they need. Now, as far as what's out there, 74% of all of these home buyer assistance programs are some form of down payment or closing costs help. Now, of those, there are grants, there are repayable loans. 81% of all those down payment assistance programs, and I'm on the far left here, are deferred, meaning you don't have a monthly payment. 54% of these programs are forgivable loans. And typically, if it's forgivable, the payments are also deferred as well. So that's just the down payment assistance part. We also have another webinar dedicated to kind of breaking this down. We call it DPA 101. How are these programs alike? How are they different? What are the qualifying criteria and so forth? But this is just a quick overview to give you a feel for homebuyer assistance in general as we continue this conversation. But most of these programs are DPAs or down payment assistance programs. We do, however, track and monitor and make available to you and your clients through our partnerships and integrations and so forth, all of the affordable first mortgage programs that typically come from your state housing finance agencies and can include below market interest rates, reduced MI costs, higher LTV financing. We also track all of the mortgage credit certificates. Now, there are MCCs in some states, not every state, but those are annual tax credits for typically about $2,000, sometimes maybe a little bit more. But they're very interesting programs where available, very popular where available, And we encourage you to check out Down Payment Resource to see what's available in your market. Now, there are some other programs like matched savings programs, housing choice vouchers, and so forth. They're less common, less frequently used. But the point here is to say there are a lot of homebuyer assistance programs out there. The vast majority, 3/4 of them, are down payment assistance programs. But that's what we're talking about today when we say using DPA. Now, these programs come from your state housing finance agency. There's at least one in every state. Local housing finance agencies in certain markets around the country. Many cities and counties all over the country, so municipalities. Employers also often or occasionally offer down payment assistance to recruit or retain employees. And there are many nonprofits, housing nonprofit organizations around the country that provide down payment assistance programs or the like, in addition to perhaps homebuyer education, housing counseling, and other housing related services. And then there are local housing authorities. There are community development financial institutions. We have the Federal Home Loan Bank Network, and they disperse funds through their member network of banks, and they fund DPA that way. There are community land trusts, and this is tip of the iceberg. There are many more kinds of organizations that provide these programs. So again, as we go forward here, we're talking about down payment assistance offered by any and all of these programs, and we're kind of broadly looking at how to use DPA and some of the obstacles that might come up. And to be clear, these programs are available everywhere. High cost, low cost, coastal, inland, so on, rural, metro, so on and so forth. Every state has a housing finance agency. So at a minimum, there are state programs available in every market across the country. So there's really no market in the country where there aren't at least those state programs. And then, of course, you layer in all the many local nonprofits and municipalities and so forth. And there end up being tons of opportunities for down payment assistance and similar help in any market. So there are programs everywhere, even if you're in a high cost market. And with that, let's talk about some of the trends that we're seeing with down payment assistance programs. And then we'll get into kind of rethinking our perceptions here in just a moment. We know that demand for down payment assistance is super high right now, through the roof. The last couple of years, we've seen significant increases in prices. This year, we've seen significant increases in interest rates, as we all know, although it seems like there's been a little relief in the last couple of weeks. Nonetheless, they're still higher than they were at their trough, their historical lows. We also see that down payment assistance providers, the state agencies, municipalities, nonprofits that offer these programs, they continue to increase assistance amounts, how many dollars they'll give for down payment help. They are increasing income limits and purchase price limits, which are already surprisingly flexible in most markets. When we do a market analysis, people are always surprised to see how high the income limits and purchase price limits actually are for these programs. But the DPA providers themselves are trying to expand their offering to expand the audience of people that can benefit from these programs. We are also seeing a continued increase in the number of down payment assistance programs available across the country. Every quarter, going back roughly 2 years at least, we take a snapshot. Well, every quarter we take a snapshot of what's available across the country, and we kind of do a breakdown. You're going to see that next here, called the Homeownership Program Index. It's just an index of what's out there and trends among these programs. But going back 2 years at least, every quarter we've seen a net increase in the number of programs available. So more programs are hitting the market. 82% of all of these homebuyer assistance programs are funded and available today. That's actually a super consistent number. There are some programs that are seasonal, and we're going to talk about funding in a few minutes, but there are a lot of programs that are just perpetually funded, like from your state agencies. So all of this is to tell you down payment assistance is still available and is not going away. And in fact, there is increasingly more attention on these programs as a critical stopgap or mitigation method for some of the affordability issues that we see. And we're going to address some of those as well, not just price, but some of the other issues that we're dealing with. Now, here's a final breakdown of kind of what's out there. This is from the Q2 23 homeownership program index that we published. Common myth is that these programs are only for first-time homebuyers. Not true. 40% of all homebuyer assistance programs do not have a first-time homebuyer requirement. And remember, you're a first-time homebuyer for the purpose of down payment assistance if you have not owned a home in the last 3 years, specifically titled interest in a primary residence in most cases. So these programs are absolutely not just for first-time homebuyers. Plenty of opportunity for recent owners, maybe even current owners. From an inventory or property perspective, and we're going to get into this actually, this is one of the top 5 issues we're going to talk about. 33% of these programs allow for the purchase of manufactured homes with their assistance dollars. So we're not just talking then about single family detached condo townhome, right? Now we've expanded to manufactured homes. Additionally, 30% of these programs allow for the purchase of multifamily or 2, 3, or 4 unit residential properties. Beyond 4 units is commercial, but for multifamily residential properties, 30% of these programs allow for the purchase of that property type. So yet again, expanding inventory options, right? We'll dig into that in a lot more detail here shortly. 27% of these programs are statewide, meaning every state has a state housing agency, which is also why there's no market in the country where there isn't some help. But that means that the rest of the programs, many, many hundreds more are local programs, other opportunities within a market. And then over 400 programs offer extra incentives for those who have served or are serving in the military or those in certain hero professions. So you can find out more at the link below, and Mel, maybe we can put the link in chat if you guys want to explore the homeownership program index. Now let's talk about perceptions about down payment assistance. These are some of the common things we hear, especially from the lender perspective, but we're going to talk about lending and real estate here as we go. We hear that down payment assistance programs add cost. There's no margin. So, they're not profitable to originate. So agents, you might hear a lot of loan officers say, we don't like to do those. We don't make any money. All right, well, we're going to address that as we go. We hear that down payment assistance programs add post-closing complexity and risk. So from a lending perspective, getting them off the books, getting those loans sold and excuse me, off to a servicer and so forth. There are some extra steps, but we'll address that as well. We hear that down payment assistance program training is hard to implement. There are adoption questions. Are loan officers going to originate these? Agents, these are things that are happening on the lending side sometimes that may make it a little more difficult for you to identify loan officers you can work with. But we're going to talk very specifically about agent LO partnerships and address some of this. We also hear that there might be potential impact on approval timelines or closing timelines. Again, we're going to direct that we're going to address that directly. We also hear concerns about availability and continuity of funding. We hear this both on the real estate and the lending side, that, what if we have a borrower under contract, under contract, who's approved for a mortgage, but the program runs out of money before we get to closing. Very uncommon, but we'll talk about that as well. Ultimately, we love the concept, but we struggle with the logistics and the economics. And so a lot of what we're going to talk about as we break down the 5 biggest obstacles, which I'm going to show you in just a moment, are going to relate back to some of these perceptions about down payment assistance. So with that, we want to spend the rest of our time today rethinking our approach to down payment assistance, rethinking our mindset about these programs. And we will give you literally millions of reasons to rethink all of this. But let's first start with the top 5 obstacles that we're going to cover today. Inventory, number 1. We know that inventory is limited. We know that prices are on the rise. And that is, in many ways, a real obstacle, but there are still solutions. So we're gonna break that down and address that. And the way this is going to go as we go forward, we're gonna identify the problem and discuss the problem and where it comes from, and then we're going to identify solutions to each of these. So we're going to have kind of a 2-part dialogue for each of these 5 obstacles. Number 2, confusion about down payment requirements. So, do consumers understand that they can get a conventional loan with 3%, 5% down? Do they understand that you only have to have 3.5% down for FHA? So we'll talk about that in the 20% myth, and we'll break that down. Number 3, this has been a big one for the last several years. Sellers refuse or they're going to balk at contracts or contract offers that indicate the presence of a down payment assistance program, or that the buyer is using a down payment assistance program. So we're going to address that. And again, a lot of this is going to be addressed through the feedback of your peers, those who are high volume DPA originators, those who are agents that do a lot of transactions with buyers using down payment assistance. That's where we're getting all of the feedback that we're going to share with you today. DPA extends the transaction. Number 4, that's been around for a long time. There have for many years been concerns that down payment assistance prolongs the transaction, causes delays, extends the transaction, disrupts the contract agreement and the timeline therein. And so we're going to address that as well. And then number 5, establishing productive, fruitful agent and loan officer partnerships. We're going to talk about what some of the gaps are and some of the most common questions we hear from agents, and then what agents and loan officers can do or should look for in order to build more, like I said, productive and fruitful partnerships. All right, so with that, let's dive in. We're going to start with number 1 here. Inventory is limited and unaffordable. So we're gonna identify the problem, and then we're gonna talk about the solutions as we have gathered from your peers around the country. With inventory, problem is obvious. We have historically low inventory. Days on market is down, although maybe in recent weeks that might have changed a little bit. But generally speaking, over the last couple of years, days on market is super low. These properties are moving fast, the few that do hit the market. There's enormous demand for home ownership, but limited supply to meet that demand, which, as we all know, keeps prices increasing in most markets and means that buyers, especially financing buyers and especially first-time home buyers, are struggling to compete just to win the bid, just to earn the contract on the property. So with that context in mind, the inventory issue, and we could get into, are enough new construction homes being built at affordable prices and so on and so forth. But the point is, yes, there is a real inventory concern. How can down payment assistance help with that? How can down payment assistance change the scenario for prospective buyers? First of all, consider alternative inventory sources. There are many local nonprofits or municipalities, cities, counties that have agency or municipal owned properties. They're being refurbished or revitalized and brought back to market. They're being newly constructed, perhaps on a community land trust model, so CLTs. Those are worth considering and keeping track of. Get to know, what's going on with your local agencies, your local nonprofit, housing nonprofits, local, cities. Is the city buying up and rehabilitating properties and bringing them back to market, typically at cost or below market cost? The community land trust model offers a way, and those properties may not often get listed with community land trusts, but that can be another source of inventory where they're gonna pay a discounted price because under the land trust model, you're not buying the land, right? So you don't have to pay for the land, but you still get to purchase the home and enjoy appreciation in the home itself. Then there are homes that maybe need some minor repairs. And to be clear, I'm not talking about a hole in the roof and missing garage doors and that kind of stuff. I'm talking about maybe it just needs a little refresh cosmetically, or it needs some minor stuff that a handy person could do on their own, or use like a 203k loan and some down payment assistance money to do those repairs. Those are the properties that maybe hit the market and they don't sell in the first week or two. Maybe they linger for 3, 4, 5 weeks, and those are inventory options that might be worth considering and could be potentially more affordable. And certainly, first-time home buyers might want to consider those. And then coming soon, are you tapped into your agents in your market? Do you know who's frequently listing more affordable, more entry-level properties? Get connected with those agents and monitor their coming soon stream. See what kind of options show up there. And then we just talked a moment ago about multi-unit, 2, 3, 4 unit properties, as well as manufactured homes. Lots of down payment assistance programs can be used toward the purchase of either one of those property types. So consider this. Now, with a 2, 3, or 4 unit property, you can use down payment assistance, not every program, but certainly a lot of them, toward the purchase of one of those properties if you owner occupy one of the units. So your buyer would have to, let's say you buy a duplex, they'd have to owner occupy one unit, but they can use the down payment assistance to get into it. And then they have the option to rent and earn some rental income from the other unit. Then manufactured homes, modular homes, I agree, obviously in a more urban market, that might not be a common inventory option, but in suburban, exurban, rural markets, there may be some options there. So consider those. From an inventory perspective, down payment assistance can be used for a lot of different types of properties, but also counsel buyers about what the process and the competition will look like. And I don't mean to preach to the choir here, that's not the point, but given that there are limited inventory options, let buyers know, hey, here's what you're going to be facing, but also here are some other avenues we could take. Are you open to that? Should we look at CLTs, community land trusts? Should we look at duplexes? Are you open to manufactured homes? Is there a neighborhood within your commute range where maybe some of those inventory options exist? And then explore the down payment assistance programs and other homebuyer assistance programs available in that part of your market, so that at least you're aware of the presence of programs that allow for purchase of certain inventory types. And agents, your loan officers can help you understand that. But the point is, get to know at least the basics about a few different down payment assistance programs in your area and which properties can be purchased with those programs, so you're armed with that information when you start this dialogue with an incoming prospect. And then, of course, be patient. This comes from an agent in Houston. Calculated patience. Narrow down the list of must-haves. Right now, it's not likely that certainly for entry-level, median-level home prices, you're going to get all the things that you want. So narrow down the list of must-haves, but do so in order to be fully prepared to strike and to make an offer, a competitive offer, when the right property hits the market. So hopefully that helps from an inventory perspective, frame how down payment assistance programs can help. Now let's talk about number 2, confusion about down payment requirements. What's the problem here? Well, according to a survey that was done by the Urban Institute, it was a couple years ago, but definitely still relevant, and more recent news continues to reaffirm this. But when millennial renters were surveyed as part of this Urban Institute study a couple years ago and asked how much they thought they needed as a down payment to buy a home, as in, like, what do I have to even consider home ownership? 65% of them thought they had to have 15 or 20% down or more. And we know that's not true, right? I just mentioned a moment ago, Fannie Freddie conventional loans, 3% down, 5% down, FHA, 3.5% down. Qualified veterans and armed services, VA loans, 0 down. USDA loans on eligible rural properties, 0 down. The problem is a lot of prospective buyers don't know that those mortgage options exist. And according to that same survey, when asked if they were familiar with those types of mortgages, 76% of them said they had little or no familiarity with those mortgages. So they think they need a much bigger down payment than they actually do, and they're not aware of low down payment mortgage options that offer an obvious, clearer, faster path to home ownership. Those two things combined alone are issue enough, are concern enough for us, but they also tell us that we need to incorporate clarity in our marketing about those two things. You don't have to have 20% down. We got to make sure that consumers understand that magic number is a myth. You don't have to have 20% down to buy a home. And then, of course, we know that home buyers aren't familiar with industry terms, industry guidelines, lingo, acronyms, and so forth. And all of this essentially amounts to millions of home buyers sidelining themselves, bowing out of the home ownership journey because they don't think they're qualified. They don't think they have enough saved. They think a student loan is going to kill the deal. I'll come back to that at the end. But that's the problem. So with that context in mind, what can we do? First and foremost, combat that 20% misperception, that myth. We have to make sure that buyers know in our marketing. So when we're engaging on social media, email campaigns, conversations even, make sure we're addressing the fact that no, you don't have to have 20% down to purchase a home. Great if you do, good on you, but you don't have to have 20% down to purchase a home. And that might sound again like I'm preaching to the choir. Obviously, we all know this on this webinar. The point is our marketing educating buyers accordingly, aspiring buyers accordingly? And then get outside your bubble. I mean, we've kind of already gone down this path in the dialogue so far, but educate yourself about the programs in your market. We mentioned that from an inventory perspective, so you know what types of properties can be purchased, so you can expand inventory options. But generally speaking, just get to know a couple of the programs that are available in your market. What are the income limits? What are the purchase price limits? How many dollars do they get? And where is it available? Is it available within the city, within the county, statewide, and so forth? And that way, again, you're armed with knowledge about the assistance programs that are available to help more clients buy faster, more aspiring buyers buy sooner. Expose those down payment programs to your clients in your marketing. So while essentially couple that with combating the 20% myth, right? Talk about a couple of DPAs in your market when you're also talking about the fact that you don't need 20% down. And if you use Down Payment Connect, weave that into the dialogue, right? Then you're combating the 20% myth. You're letting them know about some of the key features and benefits of a program or two available in your market. And then let them search to see what's actually available for them based on their household information where they want to buy a home. And I want to pause here and ask, if you have closed a transaction, let's just say this year, if you've closed a transaction this year where your client used a down payment assistance program, I'm assuming you would have been the buyer's agent representing the buyer, let us know in the chat. We'd love to hear the story. Maybe give us a couple of details. And quite frankly, Mel, if you want to post our contact information too, we would love to turn that into like a blog post or some sort of like best practices, communication, or do a case study. And here's why I'm asking. So throw that in the chat. If you've done a DPA transaction this year, we'd like to know. Give us a few details, something simple like, yes, use this program, got 12 grand, closed on time, and loan officers chime in too. If you're doing a lot of DPA transactions, what's your average per month? Are you doing 1 a month, 3 a month, 10 a month? The reason I bring that up now is one of our favorite ways that we've seen agents and loan officers attract the attention of aspiring buyers and bring them into their pipeline is by telling the story of past customers who got down payment help to get into their home, especially if it was the first home. So I'm not seeing anything in the chat, but I know some of you have been closing DPA transactions this year, even recently. So throw it in the chat if you have. Give us a little bit to work with here. Tell us your story. But also tell that story to your social media audience. We see agents and loan officers co-market and kind of story tell like that, where they'll say, hey, I just had a buyer that did, X program and got, $14,000 toward the purchase of their first home. And if you can get permission to do things like share their names, pictures, a little bit more information, you can tell really cool stories. And that's a great way to, one, get the word out that these programs are out there. Two, position yourself and maybe your partner, agent, or LO as the experts who can get that done, which is going to lead to referral business. But it's also a great starting point to then weave in the rest of that education. You don't need 20% down. Hey, check out this program or two. If you're telling a story and you're describing a specific program, that's also great marketing about that program. And that can get prospective buyers thinking, oh, well, gosh, if it were me, what would that do for me if I could access that money? And that's when people start picking up the phone and making that call to you. So all of that is to say, provide DPA education. However, I will play devil's advocate for a moment. If that's not your cup of tea, stay in your lane. Do what works for you. But we're all looking for a purchase business. We're all trying to, stay alive till 25 is what we keep hearing recently. But nonetheless, if it's not for you, fine. You probably wouldn't be on this webinar if it weren't. Now, that said, we know that you need people that can help. So consult with your broker, ask your peers, ask your loan officer partners about the programs they participate in. Your broker and your peer agents may have loan officer referrals that they use for DPA transactions. One of the most common questions we get is from agents is, how do I find a loan officer that can help me with these DPAs? I'll pick up on that again when we get to, I think, obstacle number 5 here. We also, in terms of just giving you resources, we also have downpaymentresource.com. Anybody can go there, do a search, see what's available in your market. Talk to your local DPA providers, ask them about training classes, about education opportunities, anything you can teach, any networking events. Ask them about their program, learn about their program, ask them about marketing materials they might have available to you. Same thing with your state housing finance agencies. They may need people to teach first-time homebuyer classes. They may have training events for you that are upcoming. They may have marketing material. They're going to have a published list of lenders, often carving out top producers from that list. And you can leverage that list to build some new partnerships with loan officers, agents. So, and then of course, if you get the chance, one thing that would probably be pretty cool for one of your clients is they're going to have to take a homebuyer education class in order to qualify for down payment assistance. But wouldn't it be cool to attend that, hear the message, hear the content, see what you can weave into your own marketing while also, doing something pretty cool with one of your buyers. So there's still a lot of confusion out there among aspiring buyers about down payment requirements, but there's a lot we can do to cut through the clutter, to offer clarity, and to illuminate a path to homeownership based on actual opportunities, not misperceived obstacles. Number 3, sellers refuse contracts with down payment assistance. The problem is sellers, and typically the listing agents representing them, misunderstand down payment assistance, or perhaps had a bad past experience with a particular DPA program, or often a loan officer that didn't know how to originate and process and close that DPA, or whatever it might have been, right? And any bad past experience, it only takes one, and that's going to sour attitudes about a down payment assistance program. Another part of this problem, though, is that contract offers and sometimes buyers agents, and I don't mean to wag the finger here, but we don't think that agents are always representing or understanding the full value or the full potential of a DPA. For example, if a down payment assistance program is available and your buyer qualifies, but maybe they have enough for their down payment and closing costs, we don't want them to go into the house cash poor. But if we think about a program that allows the money to be used toward down payment and or closing costs, what if you didn't have to ask the seller to cover any closing costs? You could help the borrower remain liquid with some of their own money, and you can make a more competitive offer by saying, okay, maybe I can even go up on the price a little bit because I don't have to have all that cash for closing costs. I can put that toward my down payment. And then don't ask the seller to cover any closing costs, and you can make a more competitive offer. Things like that is what we're talking about here when we're saying frame the DPA, frame its value appropriately, understand the potential values with a DPA program. And then we also know that sellers erroneously fear delays and essentially associate down payment assistance with a lack of certainty. We're going to cover the delay piece next. That's actually number 4. But that lack of certainty, we think that a lot of sellers agents, the listing agents, are actually the ones in the seller's ear saying, oh, those DPAs, they're not as well qualified. Look, in our view, and in the view of many loan officers, if they qualify with a DPA, and that's the last point here, they're still a qualified buyer. They are approved. They just happen to be approved with an FHA using a down payment assistance as opposed to 20% down conventional or whatever the case might be. But back to the top here. So what can we do about this? It's been a rampant issue, really kind of sprung up in 2020, 2021, when DPAs just shot through the roof. DPA volume went through the roof in 2020 and in 2021, and still a ton of activity, especially compared to the overall market. So agents and loan officers, especially loan officers, leverage your reputation as a DPA expert. If you are an expert in one or some or many of the local DPA programs available, leverage that. Pick up the phone, call the seller and say, hey, look, I do these, or maybe the seller's agent. And we hear this all the time. Loan officers will pick up the phone, they'll call the seller's agent, and they'll say, hey, I do these DPA transactions all day long. I do them in the same amount of time as anything else. We've got this nailed down to a science. We know what we're doing. My processors are great. My underwriter knows the programs. You got a 45-day window. We're closing in 30, whatever the case is. Loan officers, if you have that level of expertise, leverage it. Your agent partners need that. The borrower, the agent's buyer, they need that. They need you to step up and go to bat for them. And agents expect that from loan officers, and partner with loan officers who operate accordingly and who possess that expertise. And then leverage the value of a DPA. I just talked about closing costs. The less you ask the seller to pay, the more proceeds for the seller, the better that offer looks. Here's another way that down payment assistance can offer value. Part of the seller's refusing contracts concern also mixes in a lot of sellers and their agents don't want to see FHA deals, or they're going to prefer a conventional or obviously cash deal over a financed deal. But when it comes to financing, they're going to prefer conventional over FHA. I'm sure a lot of you agents have seen that too, right? Never mind DPA for a moment, just the FHA conventional problem. I'm sure many of you have seen that. Here's another angle, a lens through which to view down payment assistance. Imagine a scenario where you've got a buyer that has maybe 3% saved, 3% of their estimated purchase price, the price they think they can buy a home at. Well, if you found a down payment assistance program that offered enough money, let's say, this is going to depend on the market, but let's say, a $300,000 purchase price, and they've got $9,000 saved up. They've got 3% saved. That's not quite enough for an FHA down payment, but they can get there quickly. Or they're trying to get to FHA, right? Or what if you found a down payment assistance program that offered, let's say, $15,000? Well, now you can get up to, we're getting up to 5% of a down payment. Now we're opening the door to conventional financing, lower payments, lower mortgage insurance, potentially better rates, and a more attractive contract offer in the seller's eyes, in the eyes of the agent, the listing agent. So that's just yet another way of framing and understanding down payment assistance with kind of a more complete picture of the opportunities. And then, of course, provide assurance that the deal will get done. Because remember, part of the problem here is that sellers and the listing agents representing them, they often associate down payment assistance with a lack of certainty. So we want to ensure, especially by having the loan officer pick up the phone and call the seller, call the listing agent, hey, look, I do these all day long. Don't worry, we're good. I'm an expert. Understand the DPA requirements. Agents, there's some obligation for you there too. If the client has to complete a home buyer education class, that's typically the one nuance, the one extra thing. Most of the rest of a DPA is just the LO processing that second application with the DPA provider. But understand DPA requirements. Do they have to take a class? Does there have to be a specific inspection? Is there some timeline we have to follow? Does the DPA provider need to do like a 1003 review or something like that? But just doing that can help prevent avoidable delays. One of the biggest delays is getting that home buyer education class done. People forget it has to be done, or they realized late in the game that they needed to use a down payment assistance and didn't realize they had to take a home buyer ed class. These are all preventable delays, avoidable delays, if you just understand the basics of the program. And I'll point out too, in that scenario, I'll tell you what, we're getting tight on time. Let me move forward here. So lastly, on this sellers refusing contracts issue, don't disclose more than you have to about financing. Now, I want to be very careful and very clear. You guys on this webinar are from different states all over the country. You know your state forms, you know your state laws and regulations. We're not saying, end around the form or the obligations you have. What we are saying is, knowing what you do have to disclose, don't disclose more than that. If you don't have to disclose the DPA, is it really any of the seller's business? So don't. But again, I realize you're all in different states and have different rules. Now, number 4, DPAs delay the transaction. So there are a lot of different things that can cause a delay, not just the down payment assistance. And actually, I'll bring up the point I was going to bring up a moment ago. Often when you realize later in the game that you need a down payment assistance program, people will add that, like you're already approved, but then, oh, we updated bank statements and there's not enough cash to close. Well, we're going to have to use a down payment assistance. That often gets the delay that causes often gets blamed on the down payment assistance program. But what was the actual problem in that scenario? And we hear this a lot. We had to update bank statements because we went so long trying to find a property and win a bid that the bank statements expired and the lender had to get new ones, but then there wasn't enough cash to close. That wasn't the DPA's fault. The DPA was the solution to a problem that was caused by, the consumer not having the funds, the loan officer not keeping up with cash to close and so forth. And again, I'm not wagging fingers here, but in that specific scenario, the DPA was the solution, not the delay. But that's not the way that most people view down payment assistance programs. So in that scenario, essentially cash to close wasn't fully investigated or documented up front. A lot of times when you have to bring in a DPA to solve for that, the DPA gets blamed for the delay when in fact it's the solution. The DPA application maybe was started later in the process, which would be in that same scenario. That could cause delays, but that's why we're saying investigate up front. Account for the timeline, prevent avoidable delays by doing all these things up front. The DPA application and approval should be done in parallel with the first mortgage. That's best practice and that's common sense. The home buyer education requirement was not completed. We already covered that, especially if you bring a DPA in later. Just know that there may well be a home buyer education class that has to be completed. Need to get that done ASAP, but most of the time that can be done online. And then part of the problem here with this perception that DPAs delay the transaction is simply miscommunication or lack of communication among the parties. So I mentioned earlier, loan officers, get on the phone, contact the seller, the seller's agent. That's probably the most important thing that you could do. And then make sure you're in touch with the buyer's agent to make sure everyone knows the timeline, the obligations of the buyer, for example, the home buyer education class, and so forth. So those are some of the problems we see. What can we do about it? Know the down payment assistance program that you're using and set the proper expectations. Loan officers, agents are going to look to you to help do this. But what is the timeline? What's the application process? Are there any review periods? Does the DPA provider need to see a final closing disclosure? Do they need to see an initial loan estimate? Do they need to see income docs and calculate income? If that's the case, and that's not always the case, make sure that's accounted for. And loan officers who know these programs, they know the timeline, they know the logistics, they know the application process and so forth. But that's the most important thing we can do is understand the program you're using and set proper expectation. And then, of course, do the home buyer education class early. I covered that. But typically, the certificate of completion that a buyer gets when they finish the home buyer education class is good for a year. There is absolutely no reason to wait to take that class. And there's no reason to be under contract and even, approved for a loan to take that class. If you think or want or know that you're going to use down payment assistance, take the class, get it done. The buyer's going to learn a lot. They're going to be a better educated client for you, and you're going to have one of the critical milestones out of the way. And then, because as we mentioned, many other things can cause delay, appraisal issues, inspection issues, insurance issues, or insurance wasn't ordered, title order was delayed. Make sure all those things get ordered and received and reviewed in a timely manner, because if not, guess what's going to be blamed for the delay? The DPA, right? Even though it's got nothing to do with any of those issues. And then agents, one more time, work with loan officers who know down payment assistance well. They understand the programs, they close on time, they communicate, they set expectations, and they work with you and your buyer to get deals done on time. Now, last of our 5 most common DPA obstacles is establishing productive agent and loan officer partnerships. The problem here is Agents have the hardest time finding loan officers that meet 3 criteria. They offer DPA, they're good at DPA, and they want that business from agents. So loan officers out there, if that's you, you need to be broadcasting your expertise in the availability of these DPA programs through you. Agents, we'll talk about solutions for you here in just a sec, but loan officers, that means you've got to be promoting your down payment assistance expertise. We see a lot of loan officers that really know these programs well, but they're not good at marketing that fact. And they don't know that there's enormous demand out there for agents that need a DPA loan officer. Highlight the local programs you offer and get active in your community in any number of ways. I mean, boots on the ground approach, right? To get those agent relationships in place. Now, agents, what are some solutions here? Talk to your existing loan officer partners, ask what kind of DPA they offer. It may just not have come up. Ask your broker for recommendations. Do they or do any of their agents work with loan officers that are good at DPA, that meet those 3 requirements, right? They're good at it, they offer it, and they want your business. And then agents, educate yourself on some of the DPAs in your market. We've hinted at this earlier. Attend a homebuyer class or homebuyer education class with one of your buyers. Go to some of the DPA providers training. Seek out loan officer partnerships and test their knowledge. Build up your own DPA IQ, at least related to some of the programs in your market, so that you have the ability to tell whether or not a loan officer is likewise savvy with a particular DPA. A lot of loan officers that do this business teach homebuyer education classes or first-time homebuyer seminars. Court those loan officers. They're the ones out there engaging in the community, and they're the ones that know these programs, want that business, obviously, and offer DPAs. And don't forget about the DPA providers themselves, the state agency, the nonprofit, the city, and so forth. Often they publish a list of their participating lenders, and many of them, increasingly more, pull out the top producing loan officers by month, by quarter, by year, however they choose to do it. Those are great lenders to approach to say, hey, look, I've got buyers, but I need a loan officer who really knows their stuff when it comes to down payment assistance. Would you like to partner with me? Those top producing loan officers on those DPA participation lists, they're the ones to approach. All right. Lastly, agents, court other agents that list affordable inventory. I mentioned this in the inventory section. If you're aware of agents that are commonly or frequently listing properties that are, median priced or entry level priced, get on their email lists, see what they've got in their coming soon stream, watch as they list new properties, because that can be an inventory solution for you. And they may also work with lenders that do DPA programs well. Now, sticking with this for a moment, loan officers, what can you do? Become a DPA subject matter expert if you are not already. It's an obvious, clear path to growing your pipeline. It's a hot topic now. Your company's probably supporting these efforts by offering these programs or making them available to you. Attend a training course from your DPA providers. Carve out an hour, 2 hours to build up your DPA IQ and empower you to go out and promote that to agents and earn more buyers. Incorporate DPA program into your marketing content as you are allowed to do by your company. Work with your product development staff, loan officers. Make sure that the programs that are available, the best ones in your market, they're being onboarded by your product development team. So you have all the best, most competitive products available to you. Host your own seminars. Your state agencies and other DPA providers might be looking for loan officers that can teach buyers or host seminars. So get involved with those things, as well as with referral sources. Where are there unions, employers, faith-based organizations, and so forth that you can engage with? And then leverage social media. Be online when your agent partners are working. Craft an intake strategy with those agents for new buyers. And I think that's maybe the most important piece. Once you've connected with agents and they know that you offer these programs and you guys start that relationship building, one of the first things to come out of that is, okay, first-time home buyer, DPA user. What's our specific intake strategy there? What's the immediate task for the borrower? What's the immediate homework for the buyer? What are the things that the agent and loan officer need to make sure they're doing? And that might be different for, somebody who's buying an investment property or somebody who's buying the third home they've owned or something like that, right? What's that specific intake strategy, and what are the immediate expectations for the buyer, the agent, as set by the LO? So LOs, that's how you can help get out in the community. You've got to let agents know that you offer these programs, and then make sure you've got a strategy for those new clients as they come in, because we're talking about DPAs. That's a little different than just a regular financing buyer. All right. So to recap, explore creative inventory alternatives. You don't need 20% down. Combat that myth in your marketing. Leverage all the values of a DPA. Can it open up conventional financing options? Can we cover closing costs and make more competitive bids? Set buyer expectations and prepare early. Avoid preventable delays. Don't let the home buyer education class be a delay. Investigate cash to close up front and document it to make sure that you're not going to have to pull in a DPA as an emergency solution down the road, but rather start it all up front in parallel. And lastly, create innovative, productive, fruitful agent loan officer partnerships. Agents seek out the LOs that do this business and want this business. Loan officers broadcast the fact that you are that LO so agents know where to go. All right, so I said we would give you millions of reasons to rethink down payment assistance. Well, here they are. 33% of declined loans, according to our analyses of almost 4 billion in declined loans, 33% of declined loans are salvageable with a DPA. Those are loans declined for cash to close, but also for qualifying ratios. If you can use a down payment assistance program to provide a bigger down payment, thus reducing the mortgage amount and mortgage payment, and maybe opening up better MI pricing and so forth, those things lower the ratios. So we're not just solving for a cash to close problem here with a down payment assistance program. We can also solve for ratios. And we know there's a ton of aspiring buyers out there that might be tight on ratios, or think they are because they've got a student loan. They think that's going to kill the deal. They think they have to have 20% down. These are all reasons why they might think they don't qualify. I'll come back to that in a second. When a DPA is applied to a declined loan, in all those loans we've reviewed, we saw an average of 6% reduction in loan to value with the application of the best available DPA for those declined loans. That has a big impact on qualifying ratios. Then the millions of reasons. We know that right now about 68 million homes qualify for down payment assistance across the country, which is a boatload of inventory. And we also know that there are about 32 million renters that are mortgage ready, but don't think they qualify. And that's because of many of the things we've been talking about. They think they have to save 20%. And while they try to do that, the goalposts keep moving as prices rise. Or they think that some of their other debt might kill the deal. The point here is cut through some of that by getting them to have a conversation with you and by making sure your marketing addresses these misperceptions. We want them to talk to you, agent and loan officer, before they give up on home ownership. Agent, hey, here are some solutions we have. I need to get you connected with my loan officer. We got to get you pre-qualified. Don't give up just because you have a student loan. Loan officers, you should be saying to a lot of borrowers or prospective borrowers, hey, you know what? Let's take a good hard look one time, because we offer these down payment assistance programs that can help offset the payment, that can help increase your down payment, but don't give up yet until we take a look and see what you muster up. And then remember, DPA customers become customers for life. In the end, if you, or as you are able to serve, especially first-time home buyers, but buyers in general with a down payment assistance program, that's not an experience they're going to forget. They're going to refer their peers. They're going to come to you for repeat business. Huge opportunity. So I'm going to flip to our contact information, and I'm going to leave this up on the screen here. If you have questions that we don't get to today, then you can reach out to us at info@downpaymentresource.com. But Mel, what's going on in Q&A? Any trends we need to address? Any questions we need to specifically answer?
Yeah, we've had a great group, some really good questions. Keith's on as well, so I'll I'll let him speak to anything he's seen. But the one thing I do want to mention, I always like to mention, we did record this session. I know there was a lot of great information, so we will send out the recording and the slides to everyone that registered. But Sean, another question that I actually got several times was about homebuyer education. And I just wanted to know that, a couple of things. Most program providers are going to have their list of approved education providers. And when you're searching for programs on downpaymentresource.com, for example, we do include links to the approved providers for each program. But the most important thing to remember is they need to be HUD certified. And you can search for programs on HUD's website. And I did include a link to that in the chat. So just wanted to bring that up because for whatever reason, we had a lot of questions today about, how to access those classes and how long the certificates last, et cetera. So that was the one thing that I wanted to speak to. And like I said, I don't know, Keith may have some more to add.
Hey, thanks, Mel. And just wanted to say thank you, everybody, for joining. Really great questions. And I agree with you on the home buyer. And just wanted to just put in the chat, just really something that I've been noticing while talking to a lot of these agencies, that they're doing what they can to kind of widen that box to try to put more bars into their program. So I see DTI requirements increasing, income limits going up. A lot of them do have a medium income limit that they have to stay within, and those are increasing. So just maybe even if you've looked at some of these programs, even a couple months back, look again, because they may have changed. So thank you again for everybody participating.
Yeah, and I do see one question in chat. Is there a reason new construction lenders shy away from DPA programs? She's got a client that was told she could use the builder's lender or go to an outside lender and lose the builder incentives, but that outside lender could do a DPA program. Yvette, that's going to depend on the builder. But, a lot of builders have their own sort of sister company lender, if you will. And yeah, that probably does come with some incentives. I would say in that case, and some of those builder lenders, in fact, there are a number that we work with, even some of the biggest in the country, they do a lot of DPA. So maybe ask them if that's an option, and that's separate from incentives. I'm talking about a third-party down payment assistance program like we've been talking about here. But I mean, I guess, the simple answer is your client needs to weigh the options. What's the value of the incentives versus the value of the down payment assistance program? Let's see. I'm just going to look back through some of the other questions. Let's see. Somebody asked if these programs are available in New York. You tried to apply, but you were told that these weren't available in New York. Yes, they are. There are tons of programs. Every state has a state housing finance agency in New York. That's Sony May, State of New York Mortgage Agency. And they have tons of programs, and there are dozens more locally in various markets across New York. But again, I think what might be happening there is the loan officer that you're speaking to didn't themselves offer down payment assistance. So find those loan officers and the DPA provider. I mean, you can go to downpaymentresource.com and see what's available in your city or your county, or even at a specific address. And we'll show you links to the participating lenders. But Edwin, if you're a member of One Key MLS, you've got a lot more information through our down payment resource integration in Matrix and in Stratus. Let's see. New York again. Any reason? Okay, Maria, any reason why a lender would not want to provide an applicant with a DPA program? Yeah, we kind of covered that early on. There are some misperceptions, and look, there are some maybe legit concerns among lenders. If they don't have, if they're not a big lender, they don't have the expertise in-house, they might be hesitant to adopt down payment assistance programs. But there are plenty of lenders out there that have built that expertise. And again, I don't mean to beat a dead horse here, but find those lenders. And we've talked a lot here today about how to find those lenders, but find the ones that offer these programs. They're good at it and they want that business. And LOs, I mean, the questions in Q&A here, they just speak volumes about the need for you to be broadcasting your expertise, your awareness. Let's see. I don't see, there's a lot of other questions in here, but let me see what's open. Michelle asked, does DPA come in the form of a grant or a loan? It depends. Most of them are loans, but there are some grants out there as well. Every program is different, Michelle, but a lot of the loans are deferred, meaning you don't have monthly payments, and more than half of them are forgivable. So it's not a grant at closing, but forgiven at some point in the future. So depends on the program, but there's a good mix. And we have another webinar, kind of like a DPA 101 webinar, where we cover that in more detail. How is eligibility affected by citizenship status? Harley, good question. You do have to be a citizen for most DPAs. There are some that are maybe a little more flexible, but they're going to be few and far between at the moment. Talk to your loan officer about any flexibility there. All right, so we're at the hour and I don't see any more questions coming in. If you have further questions after the webinar, reach out to us at info@downpaymentresource.com. Thank you for joining today, and we encourage you to kind of rethink your approach to DPA, and we'll include a link to upcoming webinars in our follow-up communication. Thank you, guys. Have a wonderful day.